Sharp decline in the Adani Group stocks continues. The NSE adds Adani Ports, Adani Enterprises and Ambuja Cements to the ASM framework. Adani Enterprises will also be removed from the Dow Jones Sustainability Indices following media and stakeholder analysis triggered by allegations of stock manipulation and accounting fraud. Adani Ent now down 30%.
And Titan surges despite a margin miss in the third quarter. The EBITDA 2 slips on pressure in the jewelry business. Brokerages remain bullish on the stock. The management tells CNBC-TV18 they continue to see traction in attracting new customers from competition. They have a target market share of 10% by 2027.
Divi Labs trades lower ahead of its third quarter numbers. A weak quarter is expected from the pharma major on a high base from the corresponding quarter last year, down 3%.
Dabur reports a weaker than expected quarter. Down trading to lower prices units hits the growth while volumes fall 3% versus expectations of a growth.
Sources say Hinduja Group wants to hike its stake in IndusInd Bank after the recent revision in RBI's private bank ownership guidelines. However, promoters need RBI's explicit permission to do so, which is yet to be sought. The stock, as a result, higher by about 3%.
All right, well, as we speak, the markets are a little bit lower, and Adani Enterprises, Mangalam, the stock is down close to around 30%. Yeah. It's a Nifty stock that's down close to around 30%. And I'm just trying to pull out some data. The last time I saw something like this on a Nifty stock was in March 2020, when Yes Bank fell close to 50% intraday. Prior to that, in 2009, you had Satyam that had fallen 80 to around 90% odd. So for the time being, it's locked. Remember that band is getting revised every few minutes, so we'll have to keep an eye out on that front as well. But the other group companies as well are under some pressure. That's ACC and Ambuja Cements. In fact, talking about cements, let's welcome the next management. Orient Cement, well, they posted a rather good set of numbers. There was a bit of an improvement that we saw on the profitability front, on a sequential basis. Volumes were higher, which is encouraging, and realizations improved a tad bit on a sequential basis. But to understand what went on in the past quarter and what's the way ahead, we're joined by Mr. Deepak Khetrapal, the MD as well as CEO of the company. Hi, Mr. Khetrapal. Long time since we chatted. Always good hearing your thoughts. So let's get straight to that. Now, your numbers have shown an operational, improvement, which is good news. But another aspect that stood out in the past quarter, and since we only speak from a quarter-to-quarter basis, there was this rumor that was floated that the Adani Group is looking at Orient Cement. So just for our shareholders and our viewers, since we got this query numerous times, I've read out the clarification you put out on the BSE, but any truth whatsoever that Orient Cement was on the block?
None at all.
Okay.
That's what we have said categorically to the stock exchanges. We've been telling everyone. There was no truth. Even we were taken by as much surprise, I think, as you guys were when this rumor started spreading. No truth at all.
Okay, all right. Then let's get to business then. We have cleared the air on that front. So let's focus on your operational performance, which is going to be most, it's going to be paramount actually going ahead. Volumes. When we joined the last time around when we spoke, I think in August, Todd, the initial target was you'll do close to around 6.1 million tons by the end of the year. As of the 9-month mark, you've done close to around 4.05 odd. What do you end this year with? A rough number? You want to revise that guidance? What kind of a growth are you guiding for the year?
I don't know, Nigel, whether we'll call it revising the guidance. We had said we'll do about 6 million tons. And having done what we've done so far and what we are, looking at the momentum, let's face it, till October, the markets were rather slow for us. And after that, seen the momentum. January has shown continued momentum. And now with the thrust coming in from the budget, which is, as all of us have seen, huge capex towards all these which consume cement. So we are actually expecting that this momentum will continue. And in this particular quarter, we are targeting to do somewhere around 1.7, 1.8 million ton in this quarter, which will take us to around 5.8 million away from 6 million as we forecast at the start of the year. So we'll be ballpark there. We're not far away from there. If you do 58 60 lakhs tons, I think we are okay.
So give or take a few points here and there, you will be close to that 6 million tons that you had guided for earlier itself. 1.7 to 1.8 million tons are the volumes that you're guiding for in this quarter. Just wanted to understand a little about the demand itself. You said that there is a fair amount of momentum, etc. We also understand that the demand is strong, but it hasn't reflected in prices. Can you give us a sense of where cement prices have been? And as a result of which, where does your operating income go to? EBITDA per ton guidance, if you could give us?
See, EBITDA per ton is always a function of two things. As far as prices, we are all seeing that the prices have not improved to accommodate the additional costs that have started hitting us, largely fuel costs, which we know are up by 35-40% of the previous year. Now, given the fact that costs are unrelenting and the prices have not gone up, EBITDA per ton is a function of how prices move from today to the end of the year, right? If prices stay around the level that we are, and with the kind of, let's say, about 1.7, 1.8 million tons of the volume that we end up doing, including the what we call the operating leverage kicking in, I would expect that against about 630, 640 of last quarter, we should easily be able to cross over 700. The rest is if the price improvement does take place. And we've seen over many years, typically in the last few weeks of the financial year, when the demand is there, something does happen in the market and prices do come up. So I'm not completely giving up the hope that prices will improve. But even if they don't improve, we are saying the volume that we have a line of sight to is definitely exceeding 1.7 million in this quarter. Operating leverage, some bit of savings from costs will be there, because if we compare it to, let's say, the previous year and even the previous quarters, our costs have started coming down, right? Sequentially. So if that continues and operating leverage supports us to the extent, I would expect around 715 this quarter, assuming there is no price increase.
715 rupees per ton, right?
Around that, yes.
Around that part, okay. And if demand is strong, Mr. Khetrapal, getting into an election year, volumes should pick up, right? For next year, for FY24, at current reckoning, what kind of a growth you're looking at? You know, the street wants to see Orient Cement grow at a fast clip. You have the capacity of around 8 million tons odd, but can you get to, say, a 10% growth, 6.5, 6.6 million tons odd at current reckoning? Obviously, things could change, but do you think that's possible?
I personally think for the next year, assuming that all that has been promised by the budget and the support, we should be looking for, at least for our company, a growth which is definitely 10% plus, not just 10%.
Okay.
Even in this year, let's face it, the industry has grown. I think the first 9 months, the DIPP data does say that industry has grown about 10%. So from that perspective, I would expect growth to actually become stronger than even 10%. And we should be looking at, in our company, somewhere between 12 to 15% will come out with the numbers when we do the budgets in the month of March. As of now, I certainly think we are in for good times in the coming financial.
So outgrowing what the industry will grow, if industry grows at around 10%, you're expecting to grow by 12 to 15%. Final question before we let you go. Give us an updated debt in your books, the total debt. That's, you know, the short term as well as the long term. The interest cost has come down substantially in the last 1 year or so. What is that? And by 2025, 2026, what kind of a capacity are you looking at for Orient Cement?
So debt as on date is just around 400 crores, out of which about 40 crores is actually not interest-free debt. So about 360, 365 crores interest bearing debt that we have now, including short term. Okay. Project debt is down to over 270 crores now. The capacity expansion plans, as we look at it, we are closing FY23 now. I think by FY25, we should have added at least 3 million tons of capacity.
3 million tons of capacity. So from 8, you will go to closer to 11.
8.5 to 11.5. That's
all right, and that will be all organic, right?
That will be all organic.
Absolutely. No inorganic talks going on?
None.
All right. Thanks a lot, Mr. Khetrapal, for joining in and giving us all those details, clearing the air on a lot of the rumors that were going around as well. At the same time, giving us rough guidance for volumes and EBITDA per ton in the fourth quarter. We take a short break, come back. On the other side, we'll be joined by another management, that of Dabur. Mohit Malhotra, who's the CEO, joins in to discuss the company's third quarter performance. Welcome back. The pressure on the Adani Group stocks is relentless now. When we started the show, the Adani Ent stock was down 30% already. And as the circuit filter was revised, it's immediately hit a lower circuit from there as well, 35% lower. In fact, in this week itself, Adani Ent is down 63%. And that's a Nifty stock that we're talking about. Giving it company is Adani Ports, as a result of which that too has extended its decline into double digits. So 13.5% shaved off on Adani Ports as well. And the other group companies too. As a result of which, the Nifty, which was marginally in the green as we started the show, has now moved into the red by about 15 odd points. And the pain in the mid-cap index has only exacerbated. We have around 2,300 stocks which are declining, as against about 500 stocks which are advancing at the lowest point of trade for the mid-cap index, and those crisscross lines at the widest difference away from each other, with the red line firmly on top. Talking about a couple of other stocks, however, an outperformer in the mid-cap index today has been Berger Paints. Remember, the results were weak for the third quarter, but the management commentary was rather positive with regards to the outlook going ahead, and they gained market share this time around with 6.6% volume growth, so grew faster than Asian Paints, which was the leader. So the stock opened in the red, understandably on account of the weakness that we saw in margins, but from there it has recovered and moved higher. But one stock which is under pressure from yesterday is Dabur. The company reported a softish sort of quarter in the third quarter, and thereafter as well, we are seeing incremental sell-off in the stock out there. At the low point of trade, down 4%, the company reported a 3% volume decline as against street expectations of a 2% volume growth. The India business grew by about 3.3%. The international revenue actually declined by 14%. We do have with us the management of Dabur. Mohit Malhotra, who is the CEO, joins us on the phone line. Thank you, Mohit, for joining in. While the quarter was weak, you did say that you've seen some green shoots in December. Can you give us a sense of how the fourth quarter looks, and as a result of which this entire year? Because, I mean, rural is recovering. The winter products, have delayed into the fourth quarter, so you'll get some sales coming in from there as well. 9-month revenue, you've done around 6%. You had guided for low double-digit growth. Your thoughts on the full year and the fourth quarter?
Right. So, hi, Mangalam. Thank you for having me. Yeah, the operating environment continues to be pretty challenging in quarter three for us, with most of the markets, as in the categories where people operate, are actually declining. But despite that, we've gained market shares across all markets, across all segments. So 90% of the portfolio, we've gained market share, strengthening our position in the market. So there is no cause of worry as such. I think the biggest factor which marked the categories declining was inflation, and consequently inflation, the consumption pressure, and which is more felt in the rural. But rural was more so till the October month. In November and December, we have actually seen green shoots coming in rural business, and rural has actually grown in November, December, and is carrying forward in the month of January also. And we were more impacted in the states of UP, MP, Bihar, where there was deficit rainfall by around 30%, and that is a high saliency for Dabur. So that was the only isolated area where we didn't do well. If you look at other markets of North, West, East, and South, all the places, there was a huge, good volume growth for us. Optically, our volume growth looks like -3, but actually in secondary terms, it is +3 because consumers are down trading. So that's why this is what is visible. In LUP, the saliency, the mix shift is leading to the value-weighted -3, but otherwise it is +3. If you look at CAGR's pre-COVID levels, our volumes are up to an extent of around CAGRs around 5.7%, which is the industry-leading volume growth. And market shares are going up, so no cause of worry. I think because the winters have got extended into quarter four now, quarter four are seasonal products like Chyawanprash, honey, they will be, and winter care.
Got it.
Mohit will be far better.
Right, Mohit, thanks for giving us those qualitative aspects. I want to request you for a couple of numbers now. What kind of a volume growth should we look at going ahead? Point number one. Point number two, ad spends as a percentage of sales. Well, a few quarters ago, I think it was 8-9%, or it's come down to around 6%. What's the number we're looking at?
Our overall ad pro has been in the range of in line with the top line growth. Top line growth is in the range of around 4%. Our overall ad pro is also in the range of 4% broadly. Our ATLs have gone down. The media mix has actually changed. We have put some money from ATL to consumer promotion and trade promotion. So what is visible to you is ATL, but otherwise our ad pros are in line with the top line. So that's our ad pro. In terms of volumes, if you look at our volume growth, have been in the range of around 5.7, which is industry-leading volume growth, and we want to maintain a similar volume growth going forward in next year and in the quarter also.
So on a CAGR basis, we can see around 5 to 6% sort of volume growth going forward, right?
That's right. Because of the base effect, this quarter was low, and even January January last year, basis was last phase of COVID happened in the month of January. Therefore, the bases are high in January for Chyawanprash also. But going forward, I think it should all even out.
All right, we take that point. Badshah Masala, does that get consolidated in the fourth quarter or the next fiscal? And now that you've had a couple of months to work with it already, have you some visibility on the kind of revenue and margin synergies that you can extract over and above the 100-200 basis points that you had spoken about earlier?
Yes, the Badshah will be consolidating in quarter 4. Actually, from January onwards, there will be consolidation which will happen. So Jan, Feb, March will be the first quarter of consolidation happening. Going forward, we are still in the process of making the budget. It's difficult for me to tell you how much the numbers would be, but broadly, Badshah is in the range of around 240 to 250 crores fiscal year close, and margins in the range of around 20% broadly. And we are doing the budget, so exactly can't tell you what the numbers will be in the next fiscal.
All right. And what about the performance of your earlier new launches, baby care, etc.? I mean, have you seen any sort of traction out there? Because we don't see much in terms of detailing out there. And while parts of your portfolio did extremely well, you had toothpaste, hair oils and shampoos. All of them were weak this time around. Where do we see improvement there?
Yeah, so as far as the baby care portfolio is concerned, I think that's doing very well. Our Lal Tail, which is a major baby care brand, has registered a growth of 8%. If I club the digital first baby care range that we launched, the growth of baby care is ahead of around 20% for us, and we are exiting at around 20 crores. And you should still remember that it's still being restricted to only e-commerce, and the exit rates are around 20 crore of business. So we are very hopeful about baby care, and as we speak, we've new head of healthcare is joining our company with effect from January onwards. Already joined as we speak, Mr. Hayden. He was the ex-chief executive of Himalaya, who is joining Dabur. So that should provide a major impetus to baby care and also our overall healthcare portfolio.
Right. And you also, sorry, we're running a little short on time. You also had a plan to enter the carbonated soft drink market. Is that a plan on in time for summer 2023?
Yes. So we are ready. So we are creating a facility in Jammu factory where we'll be producing a carbonated beverages, and we are all set to have the new summer season with carbonated beverages, also carbonated fruit drinks actually in the market. And
FY24, do we expect double-digit revenue growth with the 19 to 21% margin band that you speak about?
Around margin band will be around the 20%, and we are going to be back to the pre-COVID levels of margin. That will be there. In terms of exact granularity on the numbers, difficult for me to tell you right now. We are in the process of actually creating our budget. But that said, we'll be gaining market shares, growing ahead of the market. So whatever market growth rates are, we'll be gaining around 200 basis points ahead of the market growth rate to gain shares. That's a long-term plan.
All right, Mohit. Thank you so much for joining in and giving us clarity on the way forward. We will await further clarity from you once you've done with your budgets. Take a short break, come back, get you more on the markets and individual stocks.